It's an hour before the open on Wednesday, November 10th. Hello, traders. Let's start with the pick that I highlighted Sunday night. I posted a video. I liked LYV. Beautiful breakout through this horizontal resistance. New all-time high Friday. Then the stock pulled back on Monday and Tuesday. Now, there was an issue with this trade. When I do my research on Sunday nights, I'm not really scouring for news. I'm scouring for technical patterns that I like. And I loved this breakout on heavy volume. Unfortunately, we had the incident in Houston, Texas, where a lot of concert attendees were killed and injured, and that could possibly lead to some lawsuits against Live Nation. So I put out a comment on my YouTube video, put it on Twitter. This was Monday morning before the open. Do not trade Live Nation. There's been some news on it, so we have to hold off on it. And you can see if we go into the 5-minute and 15-minute charts, there's the gap down Monday, and the stock has continued to drift lower. Long term, depending on how this is resolved, I think the stock still will perform well. And what you need to watch is the stock's retracement in here. If the large institutional investors feel that the lawsuits are not going to be that damaging to Live Nation, then you will see the stock pull back, but it will find support, and then it will start to inch higher on the notion that the country is reopening, there'll be more concerts, more events. In that scenario, Live Nation does well. So watch the stock. You don't really need to trade it right now. Let it kind of show you its true colors. Look for another opportunity. As far as the market is concerned, we've got this monster rally into earnings season, which incidentally, earnings were excellent. If they weren't, we would have seen an immediate retracement after earnings announcements. All the good news was priced into the market, and the news was good enough for the market to tread water. But you can see the last few days, we're starting to see the signs of some selling pressure. And you can see how in the past, when we've gotten these big rallies to a new high, it starts off pretty innocently as far as the market pullback, and then you get these large one-off days where you see very heavy selling. So we need to be cautious about that. We are still in a major uptrend. I don't want to predict that the market is going to fall. I don't want to predict that we need to be buying puts right now. I'm going to give you a long that we should take a look at. We'll take a quick look and see if we can find a short or two that might work also. The key theme is keep your trade horizon very short. So I'm looking for day trades. I'm looking for some possible overnight swing trades. Make your money, move on. So I'm keeping it very short term. Stock valuations haven't been this high since the year 2000. That was the tech bubble. We all know that there was a big pullback in tech stocks after that. So this is a time to be cautious. We also have inflation running rampant around the world right now, and we're seeing interest rates creeping higher, and that may force central banks to tighten. So that is a market threat that comes into play in 2022. Now, one quick note about inflation. Typically, if the economy is growing and central banks start to tighten, you will get an initial market pullback, and it'll be pretty severe and pretty prolonged, maybe lasting about a month or so, maybe two at most. But that pullback is risk off. That's asset managers going to the sidelines on the notion that the economy may not like those higher interest rates. That tightening may start to slow down economic growth. But what eventually happens is that everybody takes a deep breath, they monitor economic growth, and when economic growth is still on track, the market starts to recover from that drop. We've seen lots of market rallies over the last 5 decades where you have a rising interest rate environment and a rising market. As long as that rise in interest rates is related to a rise in economic growth, it's all good, no problem. The issue that we have right now is that inflation is driving this tightening, and we're not seeing the global economic growth that we'd like to see. And I look primarily domestically, we're fine. Economic numbers domestically have been fine. Asia, not so much. Korea, Japan, China, all problematic. The EU has not been growing at a fast pace for many years, actually, even before COVID. So that's a problem. If we start seeing inflation pushing yields higher and there's no economic growth accompanying that rise in interest rates, then the market will not like the backdrop. So those are things that we need to watch in 2022. I don't believe that we're going to have a huge market pullback from now until year end, but any dip would be a buying opportunity. Any dip would be an opportunity to sell out of the money bullish put spreads. Yesterday we got the PPI came in at 0.6%, 0.7% expected. That's a hot number. This morning we're going to get the CPI. Yesterday's market reaction to the PPI hot number, a little bit soft, but nothing too dramatic. We'll go into the 5-minute chart. You can see how the market initially pulled back and then it flatlined the rest of the day. This is the type of trading action during the course of the day that you need to avoid, and you need to be able to identify it. So let me give you a few key patterns that we saw yesterday during the day. First of all, long red candles closing on their low, stacked with very little overlap. Typically, this would be the type of pattern that you want to short, and you would wait for a nice little bounce, hopefully lasting no more than 20 minutes. However, if you look at this, here we go. That bounce lasts, gosh, almost 2 hours. That is not the type of bounce that is going to lead to additional selling pressure. So what you want to see is 1, 2, 3, 4, 5 bars up, and then the bottom falls out and you have another leg lower. That would validate this big market sell-off. The problem, and one of the key candles that I saw forming yesterday, was you have this long red candle right here, almost a doji, holding those losses right there, and then this gigantic, almost bullish engulfing candle right here that wipes out that red candle, gets into this red candle, and then by the end of this rally, you're almost recovering the longest red candle of the day. This type of bounce this is not what you are going to see when you have sustained market selling pressure. It'll never get this high because sellers will be super anxious. As soon as you get a little rally up, bam, 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 they're back in there driving it down. So when I saw this candle, I thought, this is not going to be a big, nasty decline today. Then we rallied up here. I thought, yep, the lows of the day could be in. So we come down, we test it twice. Now for today, we do have support here at 466. These are all buyers. Buy, 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 buy. They are going to get flushed out, perhaps even on the open this morning. That support is going to be tested. I think we'll drop below it, shake them out, trigger their sell stops, and then we'll see what happens from that point on. The CPI is going to be posted. I don't know how that number is going to come out. If it's much above 0.6%, I think you're going to see a market decline because that paints the Fed into the corner. So you need to be flexible right now. I could see two-sided trading action. When you see a day where the market is trapped within the first hour range, there's your high, there's your low. When it's trapped within the first hour range and you've got mixed green and red candles with some long ones in there and then instant retracement, just choppy back and forth trading, you should have alarms going off telling you do not trade. Trim your trade count. Trim your trade size. Be very, very selective when you're day trading because there's no market tailwind. So let's see what happens today. A couple of scenarios that you should be looking for on the open today. The market is set to open lower, about 12 S&P points lower. Fantastic when you have a strong market uptrend like this. Boom, 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 boom. Higher, higher, higher. The absolute best trading scenario that you can get is a lower open because that lower open helps you see which stocks are pushing higher, which stocks have relative strength, which stocks have technical breakouts. You are not forced to chase because you need to wait for the market bid to establish itself. That gives you lots of time on those dips on the open. Those are the days when you can be more aggressive because ultimately you want to join this very, very strong upward trend. And so right in here, that day, market opened lower than the close. It rallied hard. Beautiful. Here, market opened lower, rallied. Market opened lower, rallied. Here you've got a pretty much flat open and a rally. Market opened lower, rally. That's why you've got these long green candles. Market opens on the low, closes on the high. That's the type of pattern you want. Those are the days when you can be more aggressive. The days when you can't be aggressive are when you get these big gaps up because you may have a reversal. So you need to be very careful on gaps up, but on gaps down, wait for that market support. Try and join the long-term market rally. Get behind it, find your stock. So LYV was a little bit of a dog, but I did put the warnings out before the open to say, don't trade this one right now. Let's go and find a stock that looks good. I'm going to go into my swing trading search, going into Pop Bull. We're going to click through this. First stock on the list, RBLX. Love it. Beautiful breakout through horizontal resistance above the major moving averages, closing on its high. I really like this stock. This is your stock pick of the day. Long green candle accompanied by this heavy, heavy volume. So we get a down open today. What should we be looking for? This long green candle, I'm going to take the body of the candle. I would like to see half of it preserved. So if the stock pulls back to about 105 and holds, that will be an excellent entry point for a long position. So wait for that market support. Make sure that the stock is holding the halfway point of this long green candle. And then what we'll be looking for on a 5-minute basis is relative strength. How do we know that the stock has relative strength? 10 SI indicator will help us determine that. Orange line above zero tells us we have relative strength. You can see that the new trading system that I released last week, nice entry there for a long, made a little bit of money. Entry there, that's kind of a scratch, maybe lost a little, but that was the nice entry into the close right there that you were looking for. You can overlay the SPY on your charts as well. And when you see the market down, 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 and the stock barely giving up any gains, then you know you've got the real deal. Down, down, down. Now we're flatlining. That tells me that buyers are lined up. Downward sloping trend line here, breach to the upside, market starting to rebound. That's your entry point. You don't need more than one really good trade that has a high probability of success each day. This would have been it. There's your double low for the market. There's your rally off of that double low. We already know, based on what I told you, that the chances of a nasty, deep market drop were very low yesterday. So you should have been looking for a late day bounce in here. That was your trade of the day. So let's take a look and see what the other stocks look like. I'm going to fly through them because I need to get this video out before the open. Bullish flag, downward sloping trend line, beautiful, big volume, nice. AGC. FIVN, kind of a bottom fisher. You can see how it's breaking through technical resistance. Not as crazy about that. Don't like bottom fishing. Bullish flag formation. ASAN. I like this. ASAN looks really nice. AI, another bottom fisher trying to get through this horizontal resistance. Needs to clear the 100-day moving average. Here's what I don't like. I don't like the fact that the stock retraced all of those gains during the course of the day. So I don't know that the stock is ready for liftoff. BX, beautiful. This stock wants to go. It's gathering some steam right up at the high. I like BX. So RBLX, pick of the day. BX looks excellent. And ASAN also looks very, very good. Take a quick look at the short side, see if we've got anything. I'm looking for stocks that are getting buried like that. NVTA, absolutely destroyed through that horizontal support after earnings. There's the A. So yes, NVTA looks like it could be a good short. PayPal, see you later. Look at that gap down. Earnings after the close, another decent short. SQ following suit with PayPal. This one's choppy all over the place. Definitely weak. Watch that support down in here. If that fails, you may have a nice short on your hand. But out of all of them, I like PYPL on the short side. Take a look at the 5-minute chart. Here's the tell. Market up, 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 up. Stock flat. That means that sellers are sitting on that stock. Every uptick, wham, wham, wham. It should be going up with the market, but it's not. That tells you that the selling pressure is still there. Take a look at NVTA, 5-minute chart. Market up, 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 down, down, down. That is relative weakness. Orange line below zero. That's the edge we trade. Good luck with your trading today. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.